I think what could be useful, because it might be the case that some of you on this call, some of you watching this recording, may not have the full context on who Empowa is. So I have prepared a very, very short slideshow that will give you some extra context and explain to you where all of this fits in, to the Empowa Calculator, into our broader suite of software. And then I will get into the Empowa Calculator itself, a run through of that. And of course, at any stage, if anyone has any questions, this can be an interactive session. So you're welcome to just raise your hand and we can answer any questions. So to get started, I am going to share a tab. And I'm going to be looking at my screen here. So yeah, that's why I will be looking directly into the camera. Okay, cool. Again, thanks everyone. And for those who aren't familiar with Empowa and our mission, we're really trying to take housing across all frontier markets, from situations like we see here, informal, with not adequate access to services like running water, ablution facilities, and climate resilience being a big consideration. Homes like we see in the background here, when a cyclone hits Mozambique, for example, these homes stand no chance. And we've seen that time and time again. And Beira, where we did our pilot project, not in the last cyclone, but the one before that, about 70 to 80% of the housing stock was damaged, just in that one storm alone. So we're looking to take it from what you see there to this. This is a picture of our actual unit in Mozambique, our first pilot project, and one of the families coming to view the listing. What you can see here is one of our entry-level homes with a larger concrete foundation and some rebar. This house is not incomplete. This is how most tenants will move in, and we provide the facility for them to then, as they pay off their home, to expand that home onto the rest of the foundation and build their home both bigger horizontally and also the option to go up a floor and vertically, so the home can expand with both their needs and their family's needs. So how do we do this? How do we plan to move move homes from what you saw in the previous picture to this picture? That's done through kind of our rent-to-own offering. In short, we work with local development partners to enable them to sell their properties using rent-to-own. For us, rent-to-own is defined as having a tenant move into a home, pay a fixed minimum rent each month, and then contribute to the paying off the capital of the house as and when they have access to additional funding. The reason why this is a valuable way to pay for affordable housing is that across the African continent, around 85% of income is informal. And so when you have the majority of income being informal, products like a mortgage are just not, unfortunately, a good fit. A mortgage expects formal income. It expects to be able to run a debit order on a set date each month and to collect a set payment for 20 or 30 years to pay off a home. The reality for many of the people who we are targeting with this product is that they are informally employed. They may have sufficient access to funds, but it's not reliable, it's not predictable. You may, for example, be an Uber driver, where one week you have a really good week and the next week you have a less good week, but no one can guarantee that you're going to have earned a certain amount come the end of the month. So by having this more flexible payment plan, we allow that Uber driver to contribute maybe on the second week of the month when they have had a good week and paid towards their home. But if come the fourth week of the month, they don't have access to capital, then they don't need to contribute. They can obviously reassess the next month. Naturally, there are milestones and a duration under which they must have paid back the home, and that's all managed and tracked, and I'll get to how we do that in a second. But it's important to understand the business model and what is the product that we're offering, and importantly, the suite of software we've built, how it supports that business model. Okay, so here are some of the challenges in affordable housing in Africa. I touched on some of these when I was giving my little run through just on the last slide. But one of the big risks we see is risk, perceived risk of the continent, of a country, of currency, of project, of payment. All of this risk, this perceived risk, is what increases the cost of capital. So that means that when people are trying to get funding, even if they can get something like a mortgage, interest rates can be as high as 25, 27% for a home loan, which makes them completely unaffordable. And that's a problem we're trying to tackle on a number of different fronts. One of which is to ensure that we collect the necessary data to be able to better understand the market and to be able to combat that perception of risk, both by providing data that demonstrates that some of the risk is overblown, but also by having systems that help us to manage that risk, systems that allow us to better track how clients are paid, to be able to have early warning systems when clients are underperforming. And for today's demo, where it's most relevant with the Empowa Calculator, to better be able to price a project upfront, so you understand the potential risks and costs and returns, and then to allow you to reprice that same project as you get more information from a tool like Empowa Pay, which I will touch on in a second. So this has been a critical piece of software, and we increasingly are talking about Empowa providing a suite of software for managing the affordable housing market. Everything from a platform for tokenizing the project, which is something that we are piloting in partnership with the NSE, the Nairobi Securities Exchange, to Empowa Calculator, which is a critical step in first pricing that project, and Empowa Pay in the ongoing management, which again, as we go through this presentation, I'll expand on. Okay, so as I've said, Empowa is a housing software suite that unlocks new and unaddressed markets for financial service providers. And this sentence, in a nutshell, is what's made our conversations interesting, especially in markets like Kenya, where we've been heavily focused over the last 6 to 12 months, both as a result of our partnership with the NSE, but also because of other opportunities that exist across Nairobi. We really are providing a suite of software that addresses the full life cycle, as I mentioned, pricing, tokenizing and fundraising, and ongoing management. I think I have touched a little bit on this, and so we have different pieces of software for each of these colors, whether it be raising the funding at this stage, pricing the assets, managing the relationship. But in the interest of trying to get into the demo itself, I'll move on. Okay. Touched on that as well. I can also provide a link to this presentation in the meeting notes for anyone who wants to go through it in more detail. Just very quickly before we move on, one of our key case studies is our project in Mozambique, which has now been running for 18 months, I think, maybe coming up to 2 years. There we grew the home loan market by 5% off a very, very low base. Prior to us entering the market, there were only 600 home loans in a country of 31 million. So growing it by 5% was impressive, given the difficult conditions in the market, is really just a drop in the ocean. Here is an example of some of the payment profiles, which often get shared, and this really demonstrates our business model well. The purple that you see here is the minimum rent that a tenant is expected to pay each month, and the blue is the actual payment received from the tenant. And so whenever you see blue above the purple line, that is them contributing towards the capital in the home and ultimately taking one step closer to owning that home and no longer having to pay the rent. So here you can see this tenant routinely paid over their minimum rent, with months where they made higher capital contributions. But here, and this is a driver, here they weren't even able to make their minimum rent. We have policies in place that in a situation like this person will not be evicted because they may be able to draw down a little bit into their savings. And we do that to motivate the tenant to save more towards their home quicker and faster. If they know they can access a percentage of their savings, it builds financial resilience and means that they're more likely to park their money with us than they are to keep it in a bank or under the mattress. Here's another example of shipping agent who again, significant contributions, some months where there's, no payment, then significant contributions again. And our system allows us to accurately and in real time track this performance and provide early warning systems in the event that the rules that have been laid out have been contravened. So we know to step in and we know if we need to remove the tenant and replace them. This client as well, again, really scraping by. They want big contribution towards their home. So again, most systems cannot account for this level of flexibility and variability. And again, here's a fourth example, of a teacher. So kind of looking at the first 12 months, we had 95% on-time payment across the leases. 15% of the house sales price was saved by clients after only 12 months of occupancy. As always, our impact measures are something that we're very proud of. So 50% of homes that had access to this installment facility were women-led households, and our homes are 100% climate smart and climate resilient. I mentioned earlier on how 80% of the housing stock in Beira was destroyed. It was not the last cyclone, but the cyclone before that. There was subsequently an even larger cyclone that hit Beira last year, and we have video footage, and if you search, you'll be able to find it on our platforms of what the conditions look like, and then what our homes look like and our development looked like the following day. And really, it was as if nothing had happened. And that really is down to the climate resilient construction techniques that we encourage our local partners to make use of before they can unlock funding with Empowa. Okay, so our kind of vision, our mission, our BHAG is to enable 1 million African families to become owners of their own climate smart home by 2030. And we are hoping that some of the conversations, especially in Kenya, that we're having will fast track us towards that target. There's a lot of exciting stuff in multiple markets, but really Kenya being a key focus for the coming 6 months. All right, let me stop sharing. And if there are any questions, let me quickly check. You guys can always put them into the comments or raise your hands. But I will, if not, I will jump over to actually doing a demo of the Empowa Calculator and kind of talking us through a bit more the purpose of the calculator. Okay, so here, just give a second. Great. Here you can see a demo environment of the Empowa Calculator. This is a tool that is being built for clients to use. But AJ, I'm just going to mute you. And this is a tool that we encourage our developers to use and will also be part of kind of onboarding into the NSE tokenization platform. Why is this important? Well, when we sit down with a developer and we say, you are planning a project and we want to take that to the market to raise capital, we need to be able to demonstrate to the capital providers that this project has been well thought through, that all the necessary pricing and costing have been considered, and to also clearly outline the assumptions that have been made in generating those financial models and those predictions, and therefore what we believe the project should be worth when tokenized and raise investment. Now, like with many of the experiences we've had across the continent, there's often not a standardized approach to this. And that makes it much more costly and timely to raise capital. If every investor is having to look at a different set of financial documents that have all been laid out in a different way, showing different information, it just adds the cost, the complexity, and the time for them to make a decision. So we believe that by getting a standardized project approach that we knew covered all the information, we can fast track investment and make it clearer to capital providers what a project should be valued at, and therefore, when we tokenize it, what that price should be per token. So the team have been hard at work building this. It can be reskinned and will be reskinned for the NSE project, so it all kind of sits within that same look and feel. And here we're very proud that we've done a light and a dark mode. Personally, I prefer dark mode, so I'll do the demo in that. So let me get started by just showing you what it looks like to create a new project. So you'd create a new project. Let me just say this is called run through. Oops. Okay. And what this now does is it shows you a percentage of how far you are to completion, and kind of like a wizard gives you a bunch of questions that you need to answer. So you can pick your currency, and we'll show you. For now, obviously, it's been focusing Kenyan shillings. We can say the lease period. So let's say 20 years. You can say when is it going to start. Say tomorrow. And we can start to do development assumptions. Now, this is critical because this is often where a capital provider and a developer will negotiate or discuss their assumptions and argue based on experience, market reports, etc., what is reasonable. So you can list the number of studios you're going to build, say 2, 10 one-bedrooms, 15 two-bedrooms, let's say 10 three-bedrooms. You can list what you think would be an appropriate sales price. Again, based on market research, and can be discussed what you think is a reasonable lease price, the size of the unit, if you're going to be providing any discounts, the deposit you're going to receive. You can go through lease assumptions. So what are the expected rental increases? How you expect this to escalate? When you expect to escalate them? What are your assumptions around default? Any other key assumptions that we know are important? Or some key mandatory fields, etc. Ultimately, as you go, this completes and it can be saved and you can review it and you can come back. But ultimately, when you click calculate, I want to save us having to go through all of them, you will get an output like the following. So here we have it all completed, and we can obviously review the project assumptions again. And then here we get a summary, a complete breakdown of all the kind of financial reports that a typical capital provider would want to see in making their decision. You can see things like financial schedule. So when will we need offtake? What will this look like? What will equity be? How will that be drawn down? Here we can see quarterly cash flows. So again, will you be able to service the debt? Obviously, based on this cash flows, you'll be able to get a sense of annual financials over a time period and return calculations. And the nice thing is, obviously, with us trying to attract funding internationally, with a simple click of a button, it will go and run through the whole presentation and convert it using today's spot price to US dollars. So you can again submit that if you're trying to attract foreign capital. So moving it back to shillings, this then becomes a calculation that one can save. And then using the data from Empowa Pay, which is a software solution we've built for the ongoing management of these contracts, you can come back to your project assumptions. You can update those project assumptions. So let's say, as an example, let's think of something that might change. Maybe your lease assumptions, maybe your rent escalation is changed. Maybe your default assumptions were wrong. Maybe you've seen a higher default assumption, maybe you've seen a lower default than was assumed. We can adjust those, recalculate, and see how the project's value would have changed. So this then allows us to provide these financial reports along with the prospectus to any potential capital providers who are interested in potentially buying tokens of this particular project, allow them to consider it, to ideally support the project. And then we can release updated versions of this report along with monthly, quarterly, annual reports that allow anyone on the secondary market to get a better sense of whether the tokens are underpriced, kind of overpriced, or correctly priced on the secondary market. For many of our grassroots developers, being able to provide this level of detail may have been challenging for them, or in some cases beyond them, but by now running through a relatively straightforward wizard that they can answer each question, they can all of a sudden get investment grade documentation that we can work with them to raise capital against, and can sit alongside an offering on a tokenization platform like the one we're building for the NSE. So critical step, necessary for us to continue on the NSE Catalyst project, but also more broadly for working with developers across the continent. We are already putting this tool to use with local developer partners, especially in Kenya, in preparation for getting their assumptions rock solid, their reports out, and in front of investors to line up support for pilots that we have in mind, as well as for the NSE listing. And yeah, had it very well received. For those who are following our Catalyst project, some of those user tests will be part of our next milestone submission. So you'll be able to go there, listen to them or watch them yourself, and get a sense of how this is helping developers on the ground. That is, yeah, I think that is it for this early kind of webinar. If anybody has any questions, or Glenn, I think I saw you on the call. If you want to add anything, feel free to. Otherwise, this recording will be shared with probably a link to the milestone, as well as some additional details, I think, on our YouTube channel. I will also say that the formulas that underpin this calculator have been open sourced, so are also available through our site. They can be downloaded as an Excel spreadsheet. So if anybody doesn't want to use our Empowa Calculator, but still see something like this as being valuable, they're welcome to do that. If anyone feels like they want to check on how we've done these various calculations and question those assumptions, again, it's open source. You are able to access it and make your own amendments or challenge any of the assumptions we've made. This is a tool that we really want to put into the hands of our developers to allow them to really start to plan quality projects from the get-go. So we see making that kind of insight open source to really be stimulating grassroots investment from grassroots good practice among our developers. Okay, I'm going to stop sharing for now, but I can always reshare my screen if there are any questions. And yeah, again, thank you everyone for your time. Those who, both attending this call and those who are watching the recording. I will give it maybe, Christopher, I see your hands up. Feel free to ask away. Okay, Christopher, is there a question? Oh, yeah. Sorry, do we have any venture projects in the pipeline? Yes, we do. We have a project in Nairobi that has been funded and is currently being rolled out. You can actually see a live walkthrough of a part of that project from our recent trip to Kenya, which was about 2 or 3 weeks ago now. There's links on our YouTube channel, on our Twitter account, I think probably on LinkedIn as well. So you're welcome to go have a look at that and also meet the developer who we're working with. We also have projects live in Mozambique, and we are currently in talks to both expand our presence in Mozambique and our presence in Kenya. So hopefully in the not too distant future, we'll be able to announce further projects in additional homes in both those countries. And our focus markets primarily for this year, will probably be Mozambique, Kenya, Nigeria. That's where we're looking to establish our presence. But we realize that the timelines for a lot of these projects are extensive. So we are always open to talking to different types of partners, capital providers, local developers, management agents. We're always willing to speak to them in any frontier markets. So our focus is primarily Africa, but we understand this may have applications in other markets beyond the continent. Thanks for typing your question. Did that sufficiently answer your question around projects in the pipeline? or would you like me to expand further? Maybe if you want, you can just give me an emoji thumbs up if it's all good. Okay, excellent. Thanks for the comment and thanks for clarifying that answered your question. Okay. If there are any other questions, I'll give it a couple of seconds for anyone to raise their hand or type them. Otherwise, I had kind of expected this to take around half an hour, so we can wrap it up now. And if anybody who is currently on the call or who is watching the recording would like to find out some more about the calculator, would like to get access to it, would like to already start to use it for their projects, and you can reach out and yeah, we can set up some time to take you through it in more detail. One last question, how will you go about pre-qualifying tenants in the rent-to-own program? Great question. So we have been working on our own score called the Home Ownership Readiness Score. And the Home Ownership Readiness Score factors in a number of variables. It looks at data we've collected across our various projects and across the 18 developers using Empowa Pay in 9 markets. It looks at observed data from the projects we have funded. It looks at kind of research that we've found around affordable housing and leverages some kind of AI smarts to be able to predict who we think is going to be a good fit for the terms for rent to own. The score basically gives people kind of green, orange, and red. Where green, we are confident that that person will be able to service the rent to own contract. Orange, you may want to explore a bit further, and red, we think based on the information provided and the details of your project, they're unlikely to be a good fit for home ownership at this moment. That's a score that was requested from us by a partner who we're looking to implement our full suite of software through. And so that is getting tested and it is improving with each new data point that is collected. So we are ultimately building something akin to a credit score, but for informal income. And we believe that this has long-term potential because if we can build up sufficient data and sufficient confidence in that score, we could see third parties leveraging that score for other forms of credit that could hopefully provide affordable credit for other aspects of people's lives. One could imagine a car loan or a small business loan that allowed them to grow their enterprise, which historically they wouldn't have access to, especially as an informal trader. But now with a solid track record of house payments and potentially even leveraging some of the data that M-Pesa can give us, we can start to say this person is more credit worthy, and that can again be fundamental to changing the trajectory of their life. So yeah, that's how we do it. And again, if anyone who is on the call or listening to the recording wants to understand that metric in more detail, please again reach out and we can take you through more details about how that we get to that, how that score can be customized to your particular use case, and also how you can get access to Empowa Pay for the ongoing management of any installment sale offering that you might be planning to roll out. Okay, hopefully that covered your question as well. Cool. Well, yeah, I think if there are no further questions, and since we are at the end of our half an hour slot, I will again thank everyone who's been on the call. Thank you to everyone who watches the recording, and hope everyone has a good day further. And thank you for joining our journey and showing an interest in what we're building. We are taking steps towards really providing a solution for affordable housing across the continent and really taking people from that first picture you saw, informal, unsafe housing, to much safer housing in a financially sustainable way. Okay, goodbye everyone. Thanks for your time.